では、よろしくお願いします。
Okay, well, thank you for your time today.
Thank you.
It's kind of awkward, but okay. So, could you please start with your introducing yourself briefly about what you have been doing and what you're currently doing right now?
Yeah. So, my name's Rob Nance, co-founder of CityBlock Capital.
Yes.
And CityBlock Capital's first fund is NYCQ, as you know. My background is in banking, private banking, investment banking here in the States. After that, I ran a venture capital fund called Edgewater Equity. Ran that for 4 years, and about 18 months ago started CityBlock Capital at NYCQ.
Great. So what basically made you into STO as an industry to invest in cryptocurrency industries? Why would you trying to get into this field?
Yeah, I think that what I saw was venture capital as an asset class. One of the big problems with it is that your money's locked up for a long time.
Right.
So if you invest normally in venture capital, you can't get your money out for 8 to 10 years. And I started looking for a way to make that better, to improve it. And what I saw is you could use blockchain technology to improve that. And I saw what Blockchain Capital did with their BCAP token. And what I thought was we could take that one step farther, improve it more, and using the securities laws that exist, both in the U.S. and abroad, and make very high quality assets available to investors all over the world.
Okay. So, but it seems like you're trying to work in this field quite heavily, trying to invest in this field. And I have seen your work. I've been following NYCQ, what it does, and what are you trying to achieve in 2019 at this point? We just started out. 2019 started out, and it's almost the end of January. But what are you trying to maybe achieve this end of this year?
This year,
maybe next year too.
And so I think our goal for this year is we're finishing our fundraising for our fund.
Okay.
And that should happen in the next month or two. And once all that fundraising is complete, we'll go and continue to deploy capital and invest into blockchain infrastructure companies.
Okay.
So we invest at the intersection of capital markets and blockchain technology.
Okay.
And so that's a kind of a very narrow focus, but our belief is that the current financial system will be rebuilt using blockchain technology. And it will be an improvement of the current system.
Right.
It won't be a whole new system, but it'll improve it. And there's great opportunities to make profits in that system today as that infrastructure is built out over the next 2 to 3 years.
So, in particular, which kind of specific capital markets that is there any specific capital markets that you're actually looking at it, like private offering or public equities that's been traded, or is it going to be a fixed income? That doesn't really matter really. So where you can see improvements that is that where you're trying to invest in?
Right. Yeah. So I think we see a couple. We both look at private and public, but there's a couple investments that we've already made for the fund that'll illustrate that.
If you could talk about that.
Yeah, of course. So one of our first investments is a company called Bakkt, B-A-K-K-T, which is the parent company of the New York Stock Exchange.
Right.
The Intercontinental Exchange started it, and the idea behind it is twofold. So first is to build a digital asset exchange. So if stocks, bonds, commodities, currencies, we've already seen currencies become digitized, there has to be the infrastructure to trade that. Right? That's one of them. And the second is a payment mechanism. So today, if you go to Starbucks, there is an app you can use to pay, right, on your phone. Kind of like if you're in China, like WeChat, something like that.
Yes.
But what they'll do is instead of loading it with dollars, they'll load it with Bitcoin or cryptocurrency.
Right.
And that helps companies eliminate the transaction fees they pay to companies like Visa and American Express. And that's 3 to 4% that they pay every year. So in Bakkt, not only did the Intercontinental Exchange invest, but McDonald's invested, I think, $15 million. Starbucks invested $15 million.
Right.
And they did that because they see how that can be very profitable to them in the future. So we look at how do we improve current payment systems that exist, and then how do we also improve exchanges that exist. The other area of business they focus on is the Bitcoin futures market.
Right.
So right now, all Bitcoin futures that exist are cash settled. That's what it's called, not physically settled.
Right.
And they're building a physically settled solution. We think the futures market is a winner-take-all, and that they have the right infrastructure to win that market. and be the dominant player in that space.
And especially if it's ICE, that's already been dominant player in the futures market industry.
Yes.
I can see that clearly as well.
Yes. So we were very excited to be part of that deal. We think that's a very marquee deal. It's difficult for most people to get into. So we're excited that investors have access. Another deal that we invested in was Coinbase. So we're very excited to be in Coinbase. I think most people know what Coinbase is and what they do. We believe that they're going to continue to build out online infrastructure, introducing to people into cryptocurrency, but also becoming a real competitor with Binance is really their goal right now. And they're starting to trade more tokens. And again, as venture capitalists, we don't know what cryptocurrency is going to win. We don't know whether Bitcoin, Ethereum, Monero, Zcash is going to be the best cryptocurrency, but we would rather buy the infrastructure around it and then make money off every transaction that happens in that space.
Okay.
That's how we think about it. So those are two investments. Third investment we made is a company called Nomics.
Mm-hmm.
So Nomics is a data company, an API company,
mm-hmm.
and one of the problems in the crypto space today is that institutional traders don't have really good data. So they can't have reliable things like order book size.
Yeah.
And for example, if an exchange goes down for 1 second and it shows all zeros, that could throw off an algorithmic trader.
Right.
So Nomics is building a world-class institutional grade API for those traders to use. It's run by a guy called Clay Collins.
Okay.
And Clay is actually the host of the Flippening podcast, if you've ever listened to that.
I better listen to that now.
Yeah, it's a very, very good podcast. So he's had some great interviews on there. In fact, he's also interviewed our investment partners for this fund, which is Atit Alawalia and Nikhil Kalgadi.
Oh, really?
Yes.
Okay. That's great. So, I think people are actually seeing the opportunities in the STO, security token, as well as the infrastructure that's building security token offerings, the new finance infrastructure. But it seems to me it's going to get difficult for retail investors to actually directly invest into these companies. Maybe, how would you recommend us? I guess you're going to tell me that investing into NYCQ, but how would you recommend us to get exposure into this new companies that's trying to build new finance infrastructure?
Right. Well, you invest in NYCQ. I think that one of the challenges generally for investors is that it's very hard to get access to the best deals.
Yes,
right?
That's
Whether
correct.
whether it's Uber or Airbnb
Right.
or anybody, it's very hard. I think that the STO market will help, as we say, democratize that. In other words, give access
mm-hmm.
to investors around the world
mm-hmm.
because of the way U.S. regulation works.
Mm-hmm.
So if you're trying to invest in those companies in the U.S.,
mm-hmm.
We can accept more non-U.S. investors than we can U.S. investors.
I think from that view, Japanese is being Japanese, has Japanese citizens, is really good.
It's very
we're not
good.
part of this accreditation roles.
It's very, very good. So, for example, in our offering, if you're a U.S. investor, the minimum investment is $50,000.
That's right.
Right.
Yeah.
So that's 50 times the amount of investment that it is if you're a non-U.S. investor. So what I would say is, as a Japanese investor, as a non-U.S. investor, the key is to look at the U.S. STO market and see who's starting funds, because I think you'll have a lot more access
mm-hmm.
To those great opportunities through those funds. I don't think today there's a lot of people that have done what we've done yet, that have started funds. Certainly you have Blockchain Capital with BCAP, Spice VC, you have their token, and then really us are kind of the three, I think, that are really focused on this space,
mm-hmm.
Investing into this space. But what's interesting, I think, is what we'll see in the future is that if you really pay attention to the U.S. market, more traditional funds that may not invest in the STO space, but may invest in traditional venture capital, will move to this model and will give you access to those types of investments.
Right.
So I think this is a very big positive for Japanese investors.
Okay.
Because they can have access. I just think there's not a lot of people working in the space yet under the structure in which we've created our fund.
Okay. So basically, you recommend us to buy into NYCQ.
Yes, or look at things like Blockchain Capital's trade on the secondary market, Spice VC. I know both the principals of those funds, and I think that they're very good investors.
Mm-hmm.
But what I would say is there's just as of today, there's not a lot of alternatives.
Okay, sounds good. So let's get into a little bit more regulation side. So I have been keep hearing mostly current STOs in private offerings, right? They're trying to tokenize the private offerings, and people raise we have to increase the liquidity. That's the main issue that we have been facing right now. But it seems to me that if you increase liquidity and a lot of people start trading, and there will be many holders of those tokens, I think there will be a case where SEC comes in and say, hey, it seems there are a lot of people and there's going to be a lot of trade going on. We should start regulating. We should enforce more strict regulations, just like public market does. What do you think about that kind of move that SEC could make in the future? Do you think that's a possible move that could make? And how do you think we should try to, I shouldn't say avoid it, but we should try to deal with it?
Yeah, so I think that there's really clear regulation from the SEC about what's a private security and what's a public security.
Yeah.
So certainly we can only have 2,000 investors total, right? Max investors.
Yeah.
So we have built into our token the software that doesn't let it trade beyond 2,000 tokens, right?
Okay, you can do that.
Yeah, so the token itself limits the amount of investors.
Okay.
So one of the things we've done to increase the amount of investors available is keep our fund $10 million and under.
Okay.
Because if we do that, we can actually have 249 U.S. investors instead of just 99.
Okay.
So that increases liquidity for U.S. investors, right, which is important. And then it still maintains the 2,000 for non-U.S. investors.
Okay.
And so we have it built into the token, so we can't violate those rules.
Right.
If we were to, then we have to go to a whole other level of reporting to the SEC, and it becomes cost prohibitive to structure that way. So one of the great things about Securitize and their DS protocol is it builds that technology right in, so that we don't go over that trading amount. Now, I do tell people, in the case of our fund, because startup companies take several years to mature, right?
Yeah.
That they shouldn't expect to trade this for several years, right? It's going to take a few years for the returns to come into the fund.
Okay.
So, unlike the ICO market, where people would buy it and hold it and then flip it, right, and make a lot of money, I don't think that's really realistic, and that's not how the STO market will work. So it'll be a longer term hold. But the idea is, instead of having to own it for 8 to 10 years, you could own it for 3 to 4 years if you wanted. If you want to deploy capital somewhere else after that time period.
So it seems to me that a lot of investors who actually put money into this, of course, CityBlock Capital should expect more longer time frame compared to ICOs, right?
Right.
Because I have seen comments saying like it should be 1 to 2 years to be good enough for STO to mature, but it seems to me it's gonna take more than like 10 years to really catch up, really start moving.
Well, you just have to look at how startup companies work.
Okay.
We're investing in early stage startup companies.
Okay.
And early stage startup companies take time to build revenue. They take time to acquire clients. They take time to disrupt the markets that they're in. And that doesn't happen overnight. Right. And certainly people can speculate on the future of the token, the price of the token, but the underlying assets are only going to be worth what they're worth, right? They're only going to be worth what's happening. So certainly the lockup period for non-U.S. investors is only 45 days, and they're free to trade it after 45 days. But as an investment, you have to think of venture capital as a little bit longer opportunity than some other asset classes. We're simply trying to take it from 8 to 10 years to maybe 2, 3 years, 3, 4 years, when it would make sense to sell because you've made a nice profit.
Okay, that makes sense. Actually, do you have any questions? Yeah.
Just a moment.
So there's some questions that we're trying to make. What's gonna happen to this difference? What's gonna happen to the current cryptocurrency, or you could say utility tokens and STL tokens? And would there be a money that basically these investors into utility token market? Do you think that's gonna come into STO market eventually? Like the capital flow from traditional levels.
So I don't know. I think it depends if all those utility tokens go to zero or not, right?
I hope not.
And so I think it'll depend. I think that there was a lot of speculation that occurred in the ICO market, and that's why the price went up so quickly. I don't think that's reality. In other words, I don't think that happens in real markets all the time. So Certainly, I don't think you can expect that to happen in the STO market, and I question whether these ICO investors will want to invest in something that doesn't go 100x in one day, or doesn't go 10x in one day.
Right.
I don't think that that's reality. That was a speculative bubble. I don't think that'll happen again. So maybe over time, as they see, okay, this is what really will happen, this is how it'll work, there's a great opportunity to invest there.
Yeah.
But certainly we won't see those kind of returns. So I think it depends on who that investor is and what they kind of see as the future and how they want to deploy capital and how they want to invest.
Okay, so it may be better for STO industry as a whole to look into bring traditional like equity bonds, those investors in compared to crypto investors. Do you think you could say that, or is that going to be?
I think most of the investors for NYCQ are traditional investors.
Oh, really?
Yes.
Surprising. I was just thought because it's going to be crypto because it's actually the new type of fund that tokenized, right? So I thought it's quite difficult to convince traditional investors investing because I'm sure those people are afraid of good like tokens.
Well, and what we tell them is you still receive the documents you have traditionally, right? So you still have a private placement memorandum,
right?
You still have a subscription agreement, you still have a limited partnership agreement. Those are all the documents you normally get. You just also get a digital representation of those, which are tokens, right?
Oh, okay. Yep.
And so I tell them that that it shouldn't be something that's scary, right?
Okay.
Because if someone misplaces the tokens, we can give them new ones, right? We can cancel the old ones and give them new ones. Unlike Bitcoin, where if you lose them, they're gone forever.
Okay.
So we're trying to teach the traditional market that it's not a scary thing and that it's better. I think that some of the ICO investors have really unreasonable expectations. In other words, they're going, this isn't going to go 100x overnight. Why would I invest in that? And so we say, so I think we really focused on the traditional market for the most part.
Okay. That's good. So, this is another question I wanted to ask you. What's your favorite utility tokens? You can include Bitcoin.
You already invested some cryptocurrency?
So I've the only cryptocurrency I hold right now is Bitcoin.
Okay.
I haven't invested in any utility tokens.
Okay.
Simply because I find it very hard to value them. I don't know how to. So like a company like Bakkt, I can look at how much cash flow they have. I can look at what they're building. I can look at what other startup companies have done and find a value. I don't know how to value, a utility token properly.
Right.
That's why we're venture capitalists, and so when we have a very big responsibility. When we take someone else's money, we have to do good by that money, and we have to make sure that we treat it to the highest standard, right? And so I can't do that I don't know how to do that with an ICO.
Okay.
Yeah.
I know that's the most difficult part of ICO. It's really you can't tell which one's gonna go up and down because we don't have any criteria to measure those values, right? Yeah. There's another interesting question I want to really ask you.
Okay.
If you could change the regulation, what would that be?
That's easy. The accredited investor law in the U.S. because you have to have a minimum income and net worth to invest, and so what happens is it's kind of like only the rich can get richer, right?
Yes.
Because you have to be a certain income, certain net worth. And so I believe that everyone should have the opportunity to invest into these projects. And I think it's kind of funny that non-U.S. investors can benefit from what we're doing more than U.S. investors.
Thank you very much.
So maybe you don't want me to do it. Maybe you don't want that regulation to change. But I think that would help. I think that some clarity around us working with different jurisdictions or different countries around the world would be helpful. Because I think what's going to happen is a lot of the borders and the walls that exist, cryptocurrencies helped bring them down. So I think that 4 years ago or 5 years ago, you wouldn't have imagined investing in a venture fund in New York City, right? But what you learn through cryptocurrency is there aren't any really borders, and you can invest in projects all over the world. And I think that's really, really powerful.
Okay.
What I'm seeing is, I think we have investors from like 14 different countries, which is really cool. I mean, South Africa, Australia, Japan, many places, and that wouldn't have happened 4 or 5 years ago. So I think as we do that, we become more of a global community. There has to be kind of some thoughtful regulation around how that works and how we can facilitate those transactions easier.
Okay. I guess we could use Bitcoin to do that, right? Because
Right.
sending USD takes so much fee and time. So I
Yes.
guess Bitcoin is a lot better
Yes.
if the fund accepts that. But accreditation, it seems that's most not hectic, but problematic regulations that everyone keeps talking about in STO market, STO industry. If you could amend that, how would you amend that regulation? Those criteria to be accredited investors, right?
So the accredited investor laws in the U.S.
Yeah.
came into place in 1982.
Okay.
So in 1982, there was no internet. No one had a computer in their home.
No.
And so how do you do it? Well, you just say, okay, you have a certain net worth or a certain income. I think today, with the internet, we could certainly have educational classes that someone could go take online, and if they pass a test or they go through a certain criteria, then they could invest a certain percentage of their net worth into these offerings.
Okay.
I think that if people, they should certainly know what they're investing in,
Okay.
right? And they should understand capital markets, and they should understand how things are working. But I think that would be a lot better way to do it, right?
Okay.
So people can go, they can learn about investing online, and then they can, get a certificate, and that would allow them to invest.
So you think we should make more like certificate based. You earn some certificate to be able to invest in these private offerings as accredited investors.
And so what some people are saying is, as an example, if you have a degree from a business school,
Yeah.
right, then maybe you can invest in this. You don't have to take a test. If you are a professor at a university, maybe you can do this. Because, it's funny, there are some examples in the U.S. where there's professors who maybe make $150,000 US a year,
Yeah.
but they can't invest in an accredited offering, and they're a finance professor, right? And they're, they know what they're talking about.
Right.
So there certainly needs to be a system of a combination of education, a combination of maybe tests that could improve the current system, and I think we have the infrastructure to do it today. I think in 1982 it would have been very, very difficult. I think today in 2019 it'd be easier.
Okay. Do you have any questions?
Yeah.
Okay. So this is his question is maybe quite
One like this. Yeah.
difficult, but it's a good question to ask.
Okay.
What if like subprime mortgage crisis happens again, and how would you hedge that again? How would you hedge your risk in terms of your fund? Right?
Right.
If that happens again, but
So I think that certainly I don't think it'll happen in the mortgage market like
No.
it did. But what happens when you have a global meltdown is
Right.
you have correlation breakdown.
Right.
Right. So all risk aligns and then everything falls.
right.
One of the great things about investing in startup companies is that if they're well funded
Mhm.
and they're long term, they can last through the downturn because they're a private company. So they don't have shareholders going out and demanding liquidity in the company.
Okay.
Right? So what's important is for us to look at the markets, anticipate, okay, we may think there'll be a recession in 2021 or something like that, making sure our companies are well capitalized through that period, so that if it is a 1 to 2 year downturn, they're fine through that period. They can keep working on their business, they can keep growing their business, and when the market recovers, they'll be well positioned to raise their next round of funding based on what they're doing.
Okay.
So that's what's really interesting about venture capital,
Okay.
is that we can actually de-risk from the public markets as long as we make sure those companies are well funded.
Mhm.
And so that's why we invest with great investors that have big, like Peter Thiel Founders Fund, people
Yeah.
like that have deep pockets, so that we can make sure they're funded. So it's a very good question, and that's one of the great things about kind of what we do, is that we can remove ourselves from the public market,
Yeah.
and we can be in a position where we can kind of ride those downturns out, and then once it turns around, because our companies survived and lots of others died, they'll be well positioned to dominate their industry.
Okay. So it seems venture capital, this market, investing in venture firms is a good way to, it's uncorrelated to traditional asset classes, so I think it's good investments. But it's going to be hard for retail investors to actually directly invest into those companies, right? So, and I think there are ways for those retail investors if they have money to invest in, but if they don't do research, it'd be difficult for those investors to actually make decisions. How would you recommend for retail investors to do research in these early startups and companies?
Yeah, I would say the best thing for a retail investor to do is invest through a fund. right?
Okay.
Because if you have a manager that has experience, that's good, that can manage that process,
Yeah.
it's very hard as an individual investor to go out and write a lot of checks into many companies
Yeah.
and then try to figure out what's going to win if you don't work full-time in the industry, if you're not full-time in the ecosystem. There's a great book, if someone wants to get into angel investing, so investing very early in startups, a guy called Jason Calacanis wrote a book called Angel.
It is a Japanese version of that.
I was just going to say, I know there's a
good
Japanese, and that's a good way to look at if you want to invest in startups, if you want to learn how to invest in startups. I think you have to be a higher net worth individual because you've got to write a lot of checks.
Yeah.
But a great way to start is to go into funds, right, that have smaller minimums. And that'll give you exposure, and you can use that to learn about the industry, and then kind of take the next step if you want to start making, if you do well and make money, and then reinvest that into startups as you go along. So I would definitely try to start in a fund.
Okay.
I think there's very few funds, as we talked about earlier, kind of in this space right now. I think that'll continue to grow, but that's what I would focus on.
Okay. So I don't know what's the time, but what kind of competition will get tougher and tougher in 2019, 2020? I believe issuing platform there will be competitions among them. But what kind of competition do you foresee in this security token infrastructure market industry?
Sure. So there's going to be a lot of people that come from Wall Street that want to start companies to compete in kind of in the blockchain, the capital market space. So I think it's finding the best and smartest people, right, which is key.
Yeah.
There is a company that we're going to invest in called Tagomi, which is run by the former head of Goldman Sachs Electronic Trading.
Okay.
And it's backed by Peter Thiel's Founders Fund.
Okay, so, it's more promising.
So when we look at investments like that, we go, certainly there's other people trying to do what Tagomi do. They're trying to build the same business. But that's a strong team, right? And it's backed by a strong person. So it's for us, kind of when we look at it, we say, yes, there will be multiple companies in the space. Let's find the strongest. The other very important thing to remember is that unlike other startup industries, in banking, in finance, there's always more than one winner.
Okay.
So, there's really, I guess there's Lyft and Uber, but there's really only Uber, right?
Yeah.
And there's really only Airbnb.
Right.
But if you look at banking,
you have Morgan Stanley, Goldman Sachs, and UBS, and everywhere. Right.
And that's a lot, I think, because of human nature. So humans don't just want one financial institution to do business with, right? We want multiple so you can trust, many, many people. So I think what's interesting about this space is that we can win in multiple ways. So Tagomi, I think, will be the winner, but there could also be other winners too.
Right.
I think BACT will win, but the CBOE and the CME, the other futures markets, they could win too. And that doesn't mean that we don't make a lot of money in the winner. So it's a very unique space from the standpoint that I think, while we want to pick the best companies that win, the competition is actually good. Because with more competition, there's more firms, and that helps validate the space. And as it validates the space, that grows the industry as a whole.
Okay. That makes sense. So, should I make it now? Last question?
Last question. Do you care about the trend in the Chinese security market?
Chinese securities market, the trend in that, do you care about what they do in China?
Well, what's interesting about that is we can't accept money from China, from mainland China, for investment. It's U.S. law that prohibits it. So it's not an area that we've focused or followed on a lot. So we can have investors from Hong Kong, for example, but not mainland China. So I think they have a lot going on there and a lot of changes. It's just not something we've really focused on.
Okay.
Simply because we can't take money from there and can't focus on it. It'll be interesting to see what happens with Bitcoin, and we've seen a lot of Bitcoin miners there, and things like that. I'm not quite sure.
Okay. That makes sense. Well, thank you very much for your time.
Thank you. Thank you.
Yeah.
Thank you.
Thank you.